Good afternoon, everyone. So this is what our project area looks like. We're at 2,500 meters in elevation. So it's a very clement temperature. It's about 20 degrees during the day and 10 degrees at night. And rolling hills, so just about as easy of an area as you can work with in Colombia, where most of the country, as you probably know, is quite mountainous. Oh, I think I see the clavier. So I'll be making forward-looking statements, and this is a statement pertaining to the fact. Now, if you're not a speed reader, it's available online. So we acquired this project 5 years ago. We first drilled it out 4 years back, went through PEA, bankable feasibility study last year, first environmental permit under modernized mining legislation in Colombia, so the first one in decades in March this year, CapEx financing, and we broke ground in August. We'll be in production this time next year, so to go from discovery hole through to production in 5 years is quick in any jurisdiction. I'd like to draw your attention to the top photo in that slide. That's what the ground looked like when we acquired it. These are ancient Spanish sluices. So the Spaniards, back 400 years ago, were sluicing the hilltops off and catching the free gold at the bottom of the hills in sheepskins. This was the top gold producing area for the Spanish treasury back then. And artisanal activity peaked in the 1940s, where they drifted adits into the side of these hills, and today the oxides look like Swiss cheese. With these artisanals, they've left a long time ago, so we don't have anyone near our artisanal miners near our property. So our co-founders, Ian Slater is a chartered accountant. He was former managing partner of Arthur Andersen's Central Asian Mining Practice, and he also was a managing partner at Ernst & Young's mining practice. Bob Bell, who is an Australian mining engineer, he's been in the business for 5 decades, and he's really the driving force behind our accelerated timeline in Colombia. He, on 7 occasions, took mines from greenfields through feasibility, construction, and production. And before teaming up with Ian, he was general manager at Chelopech, Dundee's underground copper gold mine in Bulgaria. So he's done this before, and he'll do it again, and this is really his baby. He's down there 80% of the time, and we're quite lucky to have him. So this is where we are. We're an hour and a half north of Medellin on a paved highway. We're on-grid power, 7 kilometers from the substation, and to be frank, a lot of people have preconceived notions of Medellin, from watching TV shows or what it was like in the 80s, 90s, and early 2000s, but go visit it today, and it's really changed. It's a cosmopolitan city. It's a great place to work, and we don't have any problem attracting talent there. Now, the town that you see just north of our property package is called Santa Rosa de Osos, and that's a town of 40,000 people, which was founded on gold mining. So we don't have that expense of having to build a remote camp. We can bus shifts into camp from Santa Rosa, and we're in the right place to be looking for gold. We're in the middle of the Antiochian batholith between Buritica and Gramalote. So this is our district. It's 100 square kilometers. It's all ours. Now, what you see here are 2 regional fault lines that run diagonally, within which there are east to west trending dilation zones. Now, the property package is color-coded by the year of acquisition, and the thick red line that you see, that's our San Ramon deposit. And when you look at this presentation or read our feasibility study, all those numbers contained in both documents refer only to this 1/2 of one shear zone and only to 200 meters in depth. So our goal was to get a producing asset, get an asset into production as fast as possible to grow organically from a cash flow. So this is a close-up of the green area you saw on the previous slide. You see the San Ramon deposit on the bottom left that overlays perfectly with the pink, which is anomalous gold from our geochem. The blue outlines that you see on the map are the ancient sluices from the first slide. And every single black dot is a historic adit. And there's over 2,500 on this map. Now, the area you see to the left, where you see quite a bit of anomalous gold, ancient sluices, and a litany of black dots, does not have one drill hole. So we're quite excited about drilling in that area. So this is what our deposit looks like. It's been drilled out on a 2-kilometer strike length. It holds together very well. The red blocks are plus 10 grams per ton, and the green blocks are plus 5 grams per ton. The footwall and hanging wall is solid granite diorite, so it's a great and very competent rock to build the stopes out of. Now, this is a mesothermal system, and my geologists tell me they tend to go up depth. And again, we've drilled out, as you'll see on the next slide, only reserves down to 200 meters. Here's the long section. The thick black line is the cross section from the previous slide. And we actually have drill holes down to 650 meters, but it wasn't economic for us to be drilling and proving up reserves from surface. So the plan is to drill at depth from the decline and to the east where you see the deposit stopping, but it clearly plunging in that direction. That's the ground we acquired from Anglo Gold last year. The title is transferred this year, so we're going to start drilling that from surface. So here are the economics. I mean, the project works very well at $1,100 gold. We got a 32% IRR and levers very well to gold price. One thing to keep in mind is that our feasibility study was conducted with a peso at 1,900 to 1. Today it's 3,100, so we're looking at a 60% devaluation, which is going to flow through both our CapEx and OpEx. So the mine was the plant was designed at 2,000 tons per day. We're starting at 1,000, and we're fully funded for that. The CapEx is $74 million. We'll be producing roughly 70,000 ounces per year in each of the first 2 years. The process is quite simple. It's a coarse crush up front, then flotation, then we fine grind the float, put that back in with the tails, and through the CIL we produce a doré, 96% recoveries, and this doré is, half of it is silver, which is 8 grams per ton at 76% recoveries, and that's not in the economics. It's not in the feasibility study, but it does provide about $2 million of extra cash flow per year, which adds a bit of operational flexibility. Cash costs of $600, all in sustaining under 800. Again, these numbers do not reflect the currency devaluation. So as I mentioned, we're starting with 1,000 tons per day, and as I pointed out in the earlier slides, there are a number of opportunities to expand the resource within the district. So once we delineate reserves, which we expect to have done by year 3, we'll have another 1,000 ton per day mine on the property, and we'll be able to double our production throughput from 1,000 to 2,000 tons per day. That'll cost $14 million in CapEx, and it's basically a crusher and a couple leach tanks, and we won't lose a day of production in the process. So we're looking at, again, 70,000 roughly year 1 and year 2, and by year 3 we'll probably be humming along around 125 to 150,000 ounces of gold. So this is a slide highlighting our cost structure. You can see even at $1,100 gold, we got a pretty healthy margin, and you see what the peso's done on the right-hand side of the slide since our DFS. So we've put together a great team to bring this mine into production. Strachan GYM is the leading mine builder and operator in the Andes. So they built and operated La Arena for Rio Alto, now Tahoe. They're doing the first quantum earthworks in Panama. They've operated underground for Buenaventura, and they built Constancia for Hudbay. Lycopodium, as you all know, is the leading or the premier CIL plant builder in the world. So this is our critical path timeline. Everybody's quite excited. After breaking ground in August, we're moving a lot of dirt and expecting to start production at the beginning of Q3 next year and commercial production by the end of Q3 next year. Here are some photos from site. They're already a little dated. They're from last week, but you can see there's a lot of activity and everybody's quite excited about the progress to date. So in Colombia, social considerations are equally important as environmental questions when one applies for an EIA. And this slide highlights a bit some of the initiatives that we've undertaken to date. Now, our goal was always to build a mine. It's what we're called ready goal mining and not ready goal exploration. So when you have that end goal in mind, you take a different approach towards community relations than you would otherwise. So what you see, the thick black line there, that's our San Ramon concession. This is our area of influence. It's about 20 kilometers in diameter. So one of the things we did, we wanted to get high-speed internet to camp in order to get real-time data from our geos when they come back from the field in Vancouver. So we've put in some repeater stations in the area. We're sharing the Wi-Fi with the communities. We're offering it to them for free. The computer labs that you see there are mobile computer labs. They're staffed by our teachers who are teaching adults and children how to use the internet. We've co-funded with the church, children's playgrounds, soccer fields, and the Canadian Embassy has begun evaluating investments in agriculture. You may not know that Colombia is the largest recipient of foreign aid from Canada. And so the communities are quite excited about having the Canadian Embassy involved in their area. And just last week, my CEO, Ian, was down in Colombia. We delivered 70 wheelchairs to the San Rosa de Osos community. So these are the kind of initiatives that we've taken to date. And from community meetings, we've had about, on average, two community meetings per month for the last 5 years, something that's still ongoing today. So we've got a tremendous social license. So this is a somewhat of a litmus test. We downloaded mines of similar tonnage operated by Tier 2 producers to prove to ourselves that, San Ramon is a kind of mine that Tier 2 producers have built. In the case of B2, it's their foundational mine, and San Ramon stacks up quite well to the sample. Now, this is a slide highlighting CapEx versus IRR. You see where we are. The yellow diamonds are fully funded, and we're right in the sweet spot in that graph with low CapEx and very high adjusted IRR. So our shareholder base, Liberty Metals and Mining, which is Liberty Mutual based out of Boston, they've been a shareholder since 2012 and have been supportive in every successive CapEx financing rounds that we've undertaken. Strachan Granier Montero is our mining services contractor, and they wanted to participate on the upside of Red Eagle stock. Orion Mine Finance provided us with $60 million in debt and $6 million in equity. And as Claude mentioned, Ross was an investor since we were private and also participated in this last CapEx financing round. So shares out, 181 million. You may have seen in the press, we've been actively acquiring. We acquired a controlling interest in CB Gold. So we've got 51% of that asset. We picked it up for 7.5% of their sunk cost basis. And we've started to draw down on our credit line. So construction is moving along, and we're going to be progressively drawing down from that credit line through to production next year. So in a way of summary, this is a deposit that we understand very well. Geologically, it's quite simple. Technically, it's simple. We got low cash costs. We got additional capacity to build out our mine at depth, on strike, and within the broader district. We have strong shareholders, but if there's two things I want to leave you with from this presentation, the first would be that in each of the first 2 years, at a $1,200 gold, my EBITDA is $50 million per year. My market cap today is $50 million. So I'm trading at 1x 2017's EBITDA, where any junior operator trades between a 5 to 7x multiple. So that's the first one. There's quite an opportunity for re-rating once we get this mine into cash flow. And second, we have a tremendous first mover advantage to leverage in Colombia. We acquired CB Gold, as I mentioned earlier, for 7.5% of their sunk cost basis. So whenever projects that can be mined in Colombia come into play, you can bet your bottom dollar that Red Eagle's going to be looking to participate. So thank you very much.